Forward Guidance is brought to you by VanEck, a global leader in asset management since 1955. You'll be hearing more about a VanEck ETF later on, but for now, let's get into today's interview. I am joined by Jack Ryan, former investment banker, businessman, and founder of Rex Homes. Jack, it's wonderful to see you and meet you. You've got a storied career. You spent over 20 years at Goldman Sachs. You were a partner there when it was still a partnership, still a private company. You ran a Senate race against Barack Obama in 2004. So there's many interesting things from your life, Jack, that we could talk about, but we're not going to talk about any of that. I want to ask you, you also have sued Zillow, the National Association of Realtors, and Trulia. So I got to ask you, why did you sue them? What did these real estate institutions do that you perceived was wrong?
Well, I think this might be interesting to your listeners. The residential real estate business, in terms of the agency brokerage business, is what I say, and I can bring the data, the largest cartel in the US. And it sounds like I'm overstating things or exaggerating in some way, but I'm really not. And ask yourself this question: why is the fee always 5.5%? Like whether it's a $300,000 home, a $3 million home, or a $30 million home, what's the fee? 5.5%. What's the fee? Even though every other internet intermediary, they've been disintermediated by the web. All their fees are down 89%, taxi, dispatchers, stockbrokers, et cetera. One isn't. Why is that? Why is it the same fee in a good economy or a bad economy? Why is it the same fee whether it's Austin or Detroit? Why is it the same fee whether it's a first-year associate or a 30-year veteran? At Goldman, or any law firm, the people who were junior weren't compensated as well as people who were senior because they have more reps. They know they're doing better, right? It's always the same fee. But probably the most damning thing is the fact that in almost every other developed country, the fees are 80% less. In the UK, it's 1.5%, Sweden, Finland, pick Asia, Hong Kong, Singapore, Malaysia. Why is it that in the US, the fees are 3 to 4 times higher than most other places in the developed world? And so I won't bore your listeners with all the other data, but when you see this levitation act on prices that defies time, that defies geography, that defies talent levels, it's always the same fee. There's a price fix. And it's a price fix on $3 trillion of trades per year. And now speaking with Goldman Sachs or Brokerage, Argo, but it's not. It's 4% is the difference between the UK and the US. Let's just assume for a second that we'd only charge the same as the UK, but it should be lower because of economies of scale in the US. Like almost every other services in the US, let's just assume it just matches the UK price, is 4% on $3 trillion of transactions per year. So it's huge, $120 billion of takings every single year, bigger than OPEC. So it's why are we doing it? Because why are we doing it? Because we it's not right for consumers. It's not right for homeowners. It's not right for the U.S. economy. It wasn't right for Rex because we were doing the same thing that we did at Goldman, bring the brokerage fees way down by 90%, which can be done, except for the rules of the cartel that prevent that from happening.
So the National Association of Realtors, NAR, is a cartel in stockbroking. Yes, it's basically now free to execute trades. The price of executing trades has gone down and down and down. And if I want a haircut, I could get a cheap one that costs $15, just a buzz cut. There's a much more expensive option. But in the world of real estate, 5.5 or 6% of every transaction goes to the real estate agents, the selling agent, and then the buying agent. And it's a little complicated. I've never bought property myself, so you can guide me and our viewers through it. But why is it that pretty much every transaction that happens, the seller and the buyer and agent share 5.5% of every transaction?
Well, Jack, it's complicated for a reason. It's because we have a trade group setting the rules of competition. They want to put all these rules in place. By the way, no other trade group in the U.S. is allowed to set the terms of competition. Why should this one be allowed to? It's by de facto, on its own 2 feet, it's anti-competitive, just the very nature. And then you ask a good question, why, it's really complicated. You're saying this, Jack, a really smart guy. We have the data to prove you're a really smart guy, and it's confusing you. Why is it confusing Jack Farley? Because it's designed to be complicated by the National Association of Realtors. They set up all these rules that are really hard to understand. They don't make common sense because they're not designed to provide common sense. It's designed to prop up prices. And so you can't really understand it. So you're not below average intelligence or anything, is by design. Then you pose the question, okay, how does it work? Well, basically, the 5.5% fee gets split, or 6%. By the way, in Iowa, it's like 7%. Depends on the geography, but it's always 5.5 to 7%. And I said it doesn't really change by geography. It doesn't change down by geography. It only goes up from 5.5%. But anyway, how does that fee get separated? The sell side agent tells the seller that they now have to buy their services to sell their home, but they also must buy a separate service, which is called paying for a buyer's agent for a buyer who you don't know, who may not even need a buyer's agent, especially in the age of the web, when all the information on the buy side is available and free, kind of like, buying stocks nowadays. But you're required to use an agent on the buy side. So number one, illegal tying arrangement. And this is maybe for some of you guys aren't lawyers on the phone. If all the competitors get together and say, if you buy this one service, you must therefore buy another service, and all the competitors agree to that, well, that's an antitrust problem, right? Imagine Goldman Sachs, Morgan Stanley, Merrill Lynch, and Citadel got together and said, hey, if you want to use us to sell shares, you've also got to pay an agent on the buy side for Jack to buy those shares. Like, you couldn't do that. You're not allowed. That's legal time. Second thing is, it allows the price fix, because they say to you, if you don't offer 2.5 to 3% on the buy side agent will steer the customer away from your home because they're trying to maximize their revenue per transaction. So if you're offering 1.5 or 2% and everyone else is offering 2.5 to 3%, well, guess what happens to your home? It doesn't get shown, right? Because they're trying to maximize their profitability. So you better pay 2.5 to 3% if that's the standard rate in that market, because otherwise your house doesn't get shown. And so that's part of the price fix.
The fact that buying agents, the agents representing someone who wants to buy a property, will have to get in on a commission or get a guaranteed commission. Otherwise, they won't show their client the property. Oh, 50 Melrose Street, that looks great. Oh, I'm not getting my guaranteed commission. I'm not going to show my client that. You know that happens, at least in some instances, and I know that happens. And you have the proof to have it, and you shared it with me. We'll share that in a moment. But is that itself illegal? The act of a buying agent saying, "Oh, I don't get my commission. I'm not showing my client the property, even though they want to see the property."
Yes, they have a fiduciary duty to the buyer, right? This is why this system is so anti-competitive, but also just so awful. Is the buyer agent is supposed to put the buyer first. Just like if you're representing the defense in a lawsuit, not allowed to get paid by the plaintiff, right? If the plaintiff is satisfied with your services, they'll give you the fee at the end of the case. Why is that against the ethical rules in the legal profession? Same with Goldman's investment banking. Can you imagine if we were to pay Morgan Stanley, if you find a buyer for this business, we'll pay you 2% of the proceeds? I thought they were representing the buyer. They're going to be incentivized to tell the buyer, you better pay, $2 billion because, there's a lot of competition and you won't get it if you offer 1.8. Well, is that because you really think that, or is it because you only get paid if you win the bid and then you get the fee? There's so many things that we can go on about this, and I don't want to bore you or your viewers. But yes, it's unethical and wrong that you're getting paid by the other side, because it makes the agent principal problems even more dramatic, and that's why other industries have banned it, other than this one apparently.
Right. So in the investment banking example you brought up, and you obviously have experience in that, it is common for let's say Morgan Stanley to get a fee of raising money, i.e., selling equity or debt to the investment public. They would get a percentage of that. You say it's less common for there to be a buying, but even if there is some sort of consulting arrangement, there's no agreements where 3% of every investment banking deal is done. If it's a risky deal, a high yield deal, I believe it's the case, you get paid more. Apple raising bonds, it's, you're going to pay a much lower percentage as a percentage. And it's competitive. If there's investment bank A, investment bank B, investment bank A is going to cost more money. Let's go with investment bank B. Oh, okay, we'll make the difference on our perceived of their skill, of their reputation, and the like. But it's not a cartel, at least in that regard. So I looked a little bit into the history of the National Association of Real Estate Boards, and going all the way back to the 1940s, they used to have a specific fixed commission. The Justice Department in 1947 hit them with the National Association of Real Estate with an antitrust suit. And here we are nearly 80 years later, and NAR, National Association of Real Estate, they have, according to Bloomberg, dutifully abandoned their formal rate schedule. So they don't have, you have to do this. Instead, they just have recommendations or suggestions. And I'll also go into a National Association of Realtors website about, here's what the media gets wrong about the fact that National Association of Realtors settled. By the way, they settled for, I think, $418 million with various groups. And you have your lawsuit still pending. This is the quote from the National Association of Realtors, NAR. Quote, NAR does not set commissions, and commissions are negotiable and were negotiable long before the settlement. They are and will remain entirely negotiable between brokers and their clients. And housing prices are dictated by market forces beyond members' control, end quote, yada, yada, yada. So NAR says we don't fix rates, we don't set commissions, and it's all market prices. In the empirical data, we know it is often 6%, 5.5%. Jack, can you help me and our audience here today explain that disparity between NAR doesn't set rates, but then the rates have the effect of being fixed?
You referenced stock brokers, and I have too. And just to give you a sense for the analogy, in 1997, 1998, I think it was, the U.S. Department of Justice sued the NASDAQ dealers because the price for trading shares was 12 cents. There was never a formal agreement that you must charge 12 cents. But the problem was Goldman Sachs was on the sell side at one moment, the buy side the next, right? And you're dealing with like 7 firms over and over again in the jurisdiction or the area where Goldman tried to make a market. And so today you're the buyer, tomorrow you're the seller. Anyway, if you tried to sell shares for less than 12 cents back in trade shares for less than 12 cents in 1997, 1998, your competitor's partner running the trade desk would call your partner running the trade desk and say, hey, Jack Ryan's acting unprofessionally. Oh, really? What? He's quoting shares for less than an eighth. Tell him to knock it off. It's unprofessional. There was no formal agreement that you had to charge 12 cents, but it was a U.S. versus, starts with Alex Brown because they're the first in the alphabet, and then they list the other 50, 60 firms after that. And then they had to stop the informal, lack of a better word, don't hold me to this price fix. Anyway, the same thing happens in residential real estate today. Oh, the seller can offer any fee they want to the buyer, as low as $1. Okay, so what happens if we offer $1? And then the hundreds and hundreds of tapes that the U.S. Department of Justice now has in their possession that says, we have people, basically threatening us, saying, hey, you're not going to last long in this town if you're not offering that buy side commission. By the way, it better be 2.5% to 3%. Else it's curtains for you as a business person in this town, right? So yeah, you can offer a penny if you want, or $1, I should say, but then what happens? The house doesn't get sold. Furthermore, this thing in economics called salience, when you mix these two fees together, it's hard to separate them and have people negotiate fairly on both fees. That's what economists call salience. Can you see the price and the service so you can start negotiating on that? When you mix the two together, it's hard for a person who isn't an investment banker or an economist for a living to, figure out, well, where can I negotiate, where I can't. So you go to the sell side agent and say, hey, I want to only pay 2%. Well, first of all, you got to pay that 2.5% on the buy side, else your home's not going to get shown. And then you really want to take my fee down from 2.5% to 1.5%. All you're doing is getting me, because you've changed the fee from 5% to 4%. It doesn't really make much difference to you. Why are you beating up on me? Do you know what I mean? And so it's not hypothetical when it's theoretical from all the economists that would say the exact same thing. And then let's see how the theory works in practice. And then there's this hundreds of tapes, 600, 700 tapes that we have where people are saying, agents are saying, hey, if you don't offer this fee, I'm telling my customer the home was sold, right? Or I'm telling all my people in this neighborhood or in this MLS not to do business with you. You're done in this town. I can go more on this if you have interest, but I'm trying to make it sure that your audience stays engaged on an arcane topic that should not be arcane. It should be as easy and as simple as buying an airplane ticket or crossing a train.
So it is arcane in terms of complex, but it really matters to so many people. I mean, what 60% of people are homeowners. This really matters to the majority of Americans, which you can't really say about Nvidia's earnings. I mean, yes, it's interesting and it is a bigger percentage of the S&P 500, but it's not going to change your life. Whereas 1% on a housing transaction, that's a lot of money.
Well, Jack, let's take the rent in the monopolistic word of the word rent and take the 4% times $3 trillion, $120 billion every year transferred from middle-class Americans to realtors. Over the next 10 years, probably over with inflation, probably between $1.5 to $2 trillion over the next 10 years for middle-class Americans. Think of just the dead weight loss of that from an economic point of view. By the way, it also affects renters. Why? Because renters, someone who bought that brownstone in New York and now is renting out those 4 different levels, they had to pay that 5% fee too and then make their ROI on that higher investment, right? Everyone bought their home for 5% less. Guess what? The market drives rents down by 5%. And by the way, it's not just the 5%, which is this kind of rent that would go away in a competitive market. But second is what happens when Pulte or Lennars or Hortons, the public stocks, don't have this 3% artificial fee on the buy side. Their margins go from 12 to 15%. How many more homes get built when all of a sudden your ROI goes up by 30% and your margins go up by 30%? So Jack, maybe if your listeners have interest, we can talk about what stocks this affects and positively and negatively. But how many more homes? And that's the margin of the public companies, which have huge economies of scale. The middle kind of private home builder, it's about 8%, 7% margins. What happens when their margins go to 10%? How many more homes get built when your margins are 10%, not 7%, when your ROI is 15%, not 10%, right? It's dramatic. So that will also reduce the price of renting as more supply of homes come on the market as their margins and the ROIs go up for building homes.
Right. So those companies you mentioned, Pulte, Lennar, those are publicly traded home builders. So they very large companies that build homes in the U.S. ROI is return on investment. You're saying that they basically would make a lot more money per house and therefore would build more houses if they didn't have this fee that everyone is paying. How is it possible that there isn't competition? So if fixing fees is formally illegal and other countries have much lower fees and there's competition in other countries, I don't know if it's NAR or other institutions, how do they maintain that grip on the market and make sure that the fees are very fixed? In other words, what is keeping the fees where they are when it's not happening in Denmark or Sweden where the rates are much, much lower?
There's a number of things to talk about. Like to make the analogy just really clear, if you see somebody levitating in Las Vegas, 5 feet off the ground, it's not levitating. I guarantee there's strings involved. Okay, Jack, don't believe that's just levitating there on its own, right? And if prices are levitating at 5.5% in the US, they're lower everywhere else. Do not believe there aren't strings. And you're asking me, what are those strings that's levitating this price?
Yes.
So one is the buyer broker commission rule that I just described, which I know sounds complicated and a little bit hard to put your head around, because it is hard to get your head around because no other industry works that way. So it doesn't come naturally to you or your listeners. Second is the segregation rule, which is what they got Rex on. Rex is going public at about $1 billion valuation. We are charging 2% going to zero, just the way Robinhood and TD Ameritrade and Schwab was doing. And what we saw, I kind of took the learnings from Goldman and brought them over to the home trading business. But there's a thing called the segregation rule. I don't think people realize that Zillow, which had said it's going to be on the side of the consumer, joined the National Association of Realtors on the eve of our IPO and started enforcing the segregation rule. What's the segregation rule? The segregation rule is if your home is listed by an MLS company, you can be put on the main page where most of the homes are. But if you are not part of the National Association of Realtors, then you get put on you have to be segregated, put on a separate tab. Well, everybody knows that once you go on a separate tab, which is not where most of the eyeballs go, then all of a sudden you're really hurt. Our views went down by 80 to 90%. They created a tab called agents, another tab called other. Other sounds like you're not an agent. Well, we passed all the licensing tests in all the states. We're in about 20 states. We passed all the agent tests for, do you understand the business? And, are your background checks copacetic? Yes. We put on a tab called other as if we're not real estate agents and brokers. So we got double whammied. One is people don't see us. And if they do see us, they think we're not agents.
Yeah, if I had a chance between clicking on I was wanted to buy or sell a home, I'd click on real estate agents or other. I'm definitely clicking on agents. I said, who other? What is other?
Yeah, and you think it's kind of the radioactive pit of homes or something. It's been kind of something suspicious going on. Like I don't want to buy a home from an other. It just feels like I'm putting a big amount of money into something that sounds a little sketchy, right? I mean, they could have said NAR-listed homes, non-listed homes, but you will have to ask them as to why they chose other. But we are agents. We were agents in every sense of the word. So there's a segregation rule. There's the forced run-up of data where when you sign your selling agreement, which are the selling agreements are usually put together by that local association of realtors, they say you must hand over all the data on your home to the local association of realtors or MLS, and then they copyright and call it their own, and they won't give the data to anybody else. So why is that important? In the 21st century, imagine if Merrill Lynch and Goldman Sachs and Morgan Stanley and Citadel said, unless you join the stock trading cartel, we're not going to give you information on the last trade, the price of the last trade, and the volume of shares traded. You're barred, right? The information is essential to doing business, right? You have to publish the price and the volume, as you know, but they want to not publish it so only they can have it. And so that also, I can go through the other rules, but those are the three things. The one that we were able to work around it because we're using AI for almost everything. I know that this is a big phrase, now or 2 years ago, but we started out that way. Why? Because we learned from Trey Goldman that the computers can do many things that humans used to. And that's the same for buying and selling homes. You can't show a home as well digitally as physically, although we were doing that. But almost everything else, it can be done oftentimes better than by a bot. Like, scheduling the home tour. A bot can go around with text messages faster than the human can. Take a boring task away from the human, drive the cost way down, and you get faster agreement that, yes, we're going to meet tomorrow at 4:00 with the inspector and everything else. There are many things we were doing with AI that just drove the cost way down, provided a better customer experience, right? And it was very transparent for other people too who wanted to compete with us. But what got us in the end was Zillow joining the NAR on the eve of our IPO and then pushing us off into a tab that people would not see and be suspicious of.
And NAR, National Association of Realtors, what is an MLS and why are they so important to the real estate ecosystem?
That's another great question. That's just another archaic block to competition that shouldn't exist anymore. So back in the 1900s, Jack, as the population was filling across the country, the 10 or 15 local brokers for the northern suburbs of Chicago would say, hey, in this paper-based world, but they didn't know anything else, they wouldn't say that, let's exchange listings with each other with physical copies. So we'll form this little group and we'll make sure that everybody knows what homes are for sale so we can get more awareness using each other's networks with people so they can know the home is for sale. That was the putative reason to do it. Now, it's also good to have all the competitors in a certain neighborhood all getting together to visit frequently to make sure that the homes and the prices are getting distributed. Adam Smith, though, has a great quote. He says, seldom do people of the same industry get together for entertainment or, I think, frivolity when the conversation doesn't end in a conspiracy against the public or to fix prices. This is him writing in 1760 or 1770. And he was so right. Anyway, here we are in the 21st century. Buying and selling homes is national in nature. You have 600 of these MLSs that joined forces in the 1930s. Let's put aside what their intentions might have been. Let's give them just the most honest of intentions, that it was to exchange information in paper form so you could make sure the homes were more easily visible to each other. But in the 21st century, to have 600 different little kingdoms that that dictate the terms of competition in that little kingdom, it makes it really hard to have something like a Citadel or a NASDAQ or New York Stock Exchange. And why isn't that a violation of the Commerce Clause to have these 600 MLSs set up and saying, here's the rules by which you compete in the northern suburbs of Chicago. Here's another one for the southern suburbs of Chicago. Here's one for the western suburbs of Chicago, all slightly different rules, although the fundamental ones that fixed prices are all the same. And here's one for Chicago itself. It just is just another, they shouldn't exist anymore. And people kind of, I think like a billboard, they've been driving by it for so long, they don't notice it anymore and how anti-competitive it really is.
So MLS is a multiple listing service. Zillow, which is a place people go on to buy or sell or rent real estate. How does Zillow get those listings? Is it other real estate agents registering with them, or do they pay MLSs to get that data? Because Zillow, it's a network effect. The more houses that are listed for sale, the more valuable it is to other people. So the more people go on the platform. So it's this virtuous cycle. But how does Zillow get its data, or other platforms get their data?
Well, there's three different ways. One is you go to every individual agent and say, list your homes with us. It gets more visibility, and that's good for your customer and for you. And then in turn, what happens is that aggregator, to use the generic phrase, takes those eyeballs and sells them to advertisers. Look, you have lots of buyers looking for homes. Advertise that you should use Jack Farley, residential real estate firm, for your buy side transaction, and you will charge you, $500 for that ad. So that one is individual agents. The second is go to the individual MLSs and say, hey, let's have a contract between you and me, Mr. Aggregator, Mrs. Aggregator, and you send us your listings digitally. There's actually an IDX exchange, like a data exchange that you would be familiar with in terms of how they send information to aggregator, how the aggregator says, yeah, we got the information, and they put it up. And the third is, get a deal with NAR or all the MLSs at once, and they just upload the listings. And so before Zillow joined the National Association of Realtors, they had about 98%, I think, I think it's what they had testified. They had 90% of all the listings in the US. Hard to do much better than that. But they said they wanted to get more listings. And so they joined the National Association of Realtors to get the other 2%. But then they lose listings like ours because all of a sudden we have to be on some different page. So you have to do the math about whether that made sense or not. Anyway, so you can get the IDX from the individual members. You can do a group deal with NAR and all the MLSs, or you can do with the individual agents. Those are the three ways to do it. But even the individual IDXs have their own rules. So there's like the rules of the MLS and the NAR, and then there's the rule of the data exchange. Even the rules of the data exchange, the default position is that you have to segregate listings again. You can't put NAR listings with non-NAR listings, right? That's just why. Is there any good business purpose for that? No. The only purpose is to prevent competition, right? So that's that's one of the ways the fees get fixed.
And is it true that Zillow makes its money by asking real estate brokerage firms to pay them so that they get shown?
Well, I am stepping a little bit deeper water than I ought to, especially people from Zillow are listening, because they'll say, how do you know about our business? But I can only know what's in the public.
Yeah, it's publicly traded. I'm not asking for anything that's not available in an annual report.
Yeah, I understand that, Jack. I will give you an answer. But I'll put the caveat because there's going to be feedback after you and I speak about coming to the other side saying, why is Jack telling you about our business model? But I will tell you what I read about in research reports. And that is that most of the revenue comes from advertising. And who's advertising on Zillow? The agents who want buy-side business, right? And then longer-term sell-side business. But you're on Zillow because you're looking for a home. Now, some people just do it for fun, in which case that's brand advertising. So when the time comes that they're familiar with their name. But that in terms of like the short-term transaction, the short-term transaction is buy-side business because they listed the home, they already had a seller. And there's this like 3% fee out there, or 2.5% fee, 2.75% fee out there for the buy-side agent, right? Which is super huge margin business. Why is it high margin, do you say, Jack? Because in the 21st century, most people are looking for homes on their own. They're not asking the agent to drive them around, Rye, New York for 5 weekends in a row like they were in the 1990s. They're finding them on their own. They come to an agent and say, hey, I have 3 homes I'm thinking about, can you get me in? And then for that $800,000 home and ride, they get $24,000. So that's really high margin business without that much work. Anyway, so the buy side agent will pay a lot for that advertising. But Jack, what happens when the fees in the buy side, if Rex is successful in its lawsuit saying this is a price fix, go from 2.5% to what the rate is in most developed countries, which is $1,000, $2,000, not 24. Obviously, if the value of that customer drops by 90%, what's the value of that advertising?
Less.
Let's just say it's less. We can all do the analysis about is it linear? Is it geometric? Is it, something like that? It's a lot less. This is why the ecosystem doesn't like, people like ourselves driving the fees to zero.
You at Rex Homes, you were representing buyers, sellers, or both?
Both.
But you were doing both, and you wanted to do business on Zillow, and Zillow said you're not listed with the National Association of Realtors, so we're going to put you on an other place. So it's basically making it harder for clients and people who want to buy homes to access your services.
Yeah. And by the way, for 7 years, we did it fine on Zillow and Trulia. And then on the eve of our IPO, suddenly they joined the National Association of Realtors and say, oh, we got to put you somewhere else. By the way, Jack, I think, just like happens in the creative, destructive world in which we live, if you guys like Joseph Schumpeter and all those people, creative destruction, is that, once we went public, of course there'd be fast followers, right? Just like, Uber, Lyft, or although Lyft claims they went first, but it doesn't make a difference if they one surpassed the other. Or Robinhood, TD Ameritrade, Schwab. Of course you have fast Goldman following Schwab as fast as we can, get the fees down. Of course. But if we're successful and go public at $1 billion, we go, oh, I see how you run this play. I'm going to knock it off. Well, one, that should be what happens. Number two, we're okay with that because that builds the credibility of the market. If there's only Schwab out there saying you can trade shares for free, maybe it's a little suspicious. When you have 4 or 5 firms saying, hey, you can do this, then customers go, yeah, of course I should be able to do this. So we were okay with fast followers. I don't think the industry was okay with fast followers, right? Because now if you had 5 or 6 firms following our business model, it completely upends the industry. But here's the weird thing, Jack, is if they weren't so focused on trying to keep the industry the same as it was in the 1990s, they'd be benefited by it. It's only through bad thinking that they go, let's keep things the way they were in the 1990s. When stocks went from 12 cents to less than a penny to trade, did firms do worse or better? The market caps of the firms, right? They're mostly better. Now, was there consolidation? Yes. They went from 50 firms to 10 or 12 because the E.F. Huttons and the Payne Webbers were all bought up, but they were paid premiums. They're all bought up, consolidate because there's economies of scale, fees go down. But when I started at Goldman, it was like, oh my gosh, we traded 100 million shares today. Whoa, 100 million shares. Can you believe it? But then when the fees go down to a penny or less, hey, 2 billion shares traded a day. Right. And by the way, that's lead generation for everything else that Goldman and TD Ameritrade and Schwab do is we're doing trades for free. We can sell you these other services. The industry would be much better off, but they're fighting this kind of last year's war and doing it, very vigorously. But I don't think it's in their self-interest. This is just an opinion as opposed to a fact. But I don't think it's in their self-interest to be fighting this 1990 war to keep fees at these super high rates.
So you believe that your IPO would have been a signal to other firms to start competing and lower fees, and the floodgates would be open, and NAR didn't want that, and Zillow was part of NAR.
Well, I can't tell what's going through their heads, but I can tell you, based on my almost 20 years of Goldman, that once someone was successful, you have fast followers coming almost every single time. Let's think of let's talk about retail. Target or Walmart. How many fast followers did you get there? How many fast followers did you get on the stock trading business? How many fast followers did you get? All these local like Ubers in the world. Of course, it always works that way, right? And so I think that I'd be hard pressed to see a successful IPO over $1 billion where that's a new way of doing business. Where people go, hey, I got an idea. Let's just knock that one off. Don't have to be a genius. Let's just knock off what Rex is doing. If we're number 2, that's an okay spot to be in a $3 trillion industry. If we beat them, that's even better. But let's just get in the zone. It's kind of simple. Some people have built their entire business model, private equity firms, especially in Europe, of just saying, we're not going to try to guess the next disruptive technology. That's beyond our ken. What we're going to do is watch the city goes public and the valuations and go, hey, we're doing the same thing. I think it's kind of clever.
Forward Guidance is brought to you by VanEck. The VanEck Morningstar-wide Moat ETF, ticker MOAT, has outperformed the S&P 500 for over a decade. How? Moat strives to achieve a simple but challenging task: buy quality stocks when they're undervalued and sell them when they're overvalued. Visit vaneck.com/moatfg to learn more. That's vaneck.com/moatfg. Now the disclosures. All investing is subject to risk, including the possible loss of money you invest. Visit vaneck.com to carefully read a prospectus before investing. The VanEck Morningstar-wide Moat ETF is distributed by VanEck Securities Corporation, a wholly owned subsidiary of VanEck Associates Corporation. Thanks. Let's get back to the interview. When was Rex going to go public? Was it in 2020?
2021.
How far along were you with the process of an IPO?
We got pretty far. We had 3 investment banks lined up, and we also had partners involved. So yes, we were pretty far along. I mean, it wasn't just like, conceptually. It was 3 of the 6 bulge bracket firms who were working on it. So pretty dang close. We were planning to go public in June, and I think they collectively, Zillow and Trulia, et cetera, joined the National Association of Realtors officially in February, and we'd already been working on our IPO. But I'm not, as you say, correlation is never causation. So I think your listeners will have to draw their own conclusions. But this industry has to change. It's not good for the American public. Did you know, Jack, speaking of some of your listeners and subscribers, some are macro focused and some are I'm sure are micro focused. But I was mentioning before that, there's like this 5% price tacked on, 5% of the price of a home is tacked on every home, right? So that hurts the housing affordability issue. And then also rents. And then as these fees go away, of course, the ROIs for home builders go away, which also drives down rents and also drives down the price of homes. So double benefit. But even if you're a macro investor, even from a CPI point of view, 40% of the CPI is your either imputed rental costs or your rental costs.
Mm-hmm. Shelter, yeah.
The price of ceteris paribus, if the price of homes, price of homes comes down by 10% in the next 7 years. Well, that's about 5.5 to 0.6 deflationary impact on the CPI every single year for the next 7 or 8 years. Like, that's huge. Like, when I say this is the biggest cartel in the history of the U.S., and people let me roll their eyes and saying this guy's exaggerating. Well, show me the bigger one. Standard Oil in 1911, maybe, I don't know. Wasn't as advanced in terms of the use of gasoline back then. But it affects CPI. It affects the price of homes. It impacts, Jack, just people moving to their highest and best use. I assume that you're in New York, and if you decide that you got this great opportunity for your skills and your family that's better in Austin, Texas, where I am right now, it's better if people can move quickly to where their talents are most appreciated. What does that do to productivity? And by the way, the homes are the launching point for a lot of other industries. Carpenters, electricians, plumbers, Angie's List, if you want to know about stocks, those transactions for those kind of services cluster on the purchase and sale of homes. When the fees go from 5%, 6% to 0 or 1, what's the volume of homes traded? I had mentioned that the volume of shares traded was 100 million to 2 billion when the fees dropped by 90%. There was a study in Toronto when they added a 1% fee to a property. It was like a transfer fee. The volume of transactions in Toronto went down by 15 or 20%. What happens when the fees go down by 5%? Of course, we know that transactions go up when transaction costs go down. And if they go down by 90%, I think it's arithmetic. I think it's geometric. I don't think it's arithmetic, linear. That's what happened at Goldman. It went up 20 when prices came down by 80%, went up by 20-fold in terms of the volume. So if you're a buyer or a seller of individual stocks and you want to take individual positions, who gets benefited by a increase in the volume of homes traded by 2 or 3 times, right? And if you want to go long short because you want to keep a neutral position, you go long the company on housing. You go long the companies that are enhanced by by volume of homes traded.
Those companies would be home builders, or what other sorts of companies?
Mortgage companies, the Rockets of the world, right? They more transactions occur, the more transactions they do. A lot of their money is made by placing the mortgage, not the ongoing management of the mortgage. That would help. So look at your mortgage companies, look at your Angie's List, those that, think about by the way, the wages and the employment of carpenters, plumbers, electricians, painters, architects, they go way up because their jobs are tied to the trading of homes. You do most of your work when someone buys a home and fixes it up for their use, not because the toilet broke this week. That's useful to them, but that's not the big business. And then same with getting your home ready to sell. So think about the industries. Put aside. I think Joe Biden mentioned recently, or President Biden mentioned recently, that he's looking at these title fees, which are also way too high. But if there's 3 times the amount of transactions, guess what? There's 3 times the amount of title services needed. Same with escrow services. Who could be hurt? The brokers, their market caps have come way down, but could they go down further? The brokers being Remax, anybody, or anywhere. I'm sorry, anywhere. I'm so sorry. That's the owner of Coldwell Banker, Compass. Those firms, the brokerage firms.
Redfin or no?
Redfin, yeah. They'd have to. You have to look at their market caps. They've all gotten hit pretty hard. That'd probably not help. And then the aggregators, they've got. I'm not saying they can't. They may come up with better ways, different ways to make money, but I wouldn't think, and that we'd have to be successful. Rex and our lawsuit has to be successful, but I wouldn't think that relying on buy-side agents would be a good read upon which to lean. If I were I'm sure there's not anything insightful to the people running Zillow, but they'd have to make a transition, which always means higher risk premium. And then if you're a macro guy, what happens to GDP growth? I think GDP growth has a permanent increase as far as the eye can see if we're successful. Why? Because home building and all the attached services are, depending on what you think, you see different analyses are 15 to 20% of GDP. And then also what happens when Jack can move to his highest and best use easily. It's really free, Jack, to move around the country. Southwest Airlines, now free to move up the country. Now you're really free, Jack, to move around the country. And how much more are things benefited by some person who's good at AI being able to move quickly from San Francisco to Austin because they can more narrowly match their skill set with the need of the person in Austin, Texas, right? I mean, this is just, Adam Smith. By the way, Jack,
Mm-hmm.
I wrote a book about this. It came out a month ago called Bringing Adam Smith into the American Home with a brilliant guy named John Tamney about how the cartel created the cartel and what's going to happen in the aftermath if we're successful in getting rid of it. Not as specific as these ideas, though, Jack. Your listeners are getting much more information than they get from the book, but they want to, I know I'm spewing a lot of stuff really fast at people, and kind of is mind blowing because I think you'll kind of figure it out. This is always going to exist this way. But I don't think it's going to. It doesn't make any sense that it would. And there's going to be a lot of winners and losers when this 125-year industry suddenly gets morphed into a 21st century one.
Right. I don't have the exact figures, but shelter, which includes rent as an owner-occupied rent, is somewhere between 30 to 40% of the U.S. inflation metric, CPI, Consumer Price Index. So, for example, the CPI right now is 3.4% year over year, having fallen from close to 9%, whereas the shelter component is still at 5.5%. As such, all items in the CPI minus shelter, once you take out shelter, is at 2.2%. So only 20 basis points away from the Fed's 2% inflation target. But it is that shelter cost that has remained very sticky. And you're saying that part of that, basic housing would be a lot cheaper if you didn't pay if homeowners and home buyers and home sellers didn't pay these owners' fees. And you said if that was locked, as a long short idea, it would be very good for title services, carpenters, and home builders, and good for GDP, good for the economy, and negative for inflation. Sort of, very, very bullish for real growth. But it would be bad for real estate agents and real estate brokers. So let's take Zillow or Redfin or Compass Group. These online real estate broker services, because they're not agents, they just provide services to agents. Describe that type of business to me, because you're right, like we still live in this system of unofficially fixed prices. Again, I'm saying that, not yours. And yet these real estate brokerage companies have collapsed in value. Why? Well, part of it is because transactions have fallen off a cliff because mortgage rates now are so much higher. So there's not a lot of activity, and activity is how they make their money. But describe how these brokerage service that provide services to realtors is not maybe as good of a business as actually being a real estate agent.
Oh my gosh, yeah, I'll tell you about that. That's really interesting. By the way, you made this great point on inflation and what happens to it. And I just want to, we're talking at a big picture level, and there'll be some people who are economists are listening, maybe, who will say, well, Jack, it's not that all 5% will go back to the homeowner. It's kind of like the instance of a tax analysis. What's the elasticity or inelasticity of demand, and blah, blah, blah. I want to acknowledge that that's true, but for purpose of simplicity, I'm saying the price of the home goes down by 5%, and we have this huge increase in homes built because the margins go up by 30 to 70%, depending on who you are and where you live. Okay, I just want to put that kind of star next to it because some smart guy is saying, well, it's not completely 5% goes back. But on the other side of that story is that then, okay, the owner retains more of the profits, and then that owner will deploy those profits in investment or other things, will in turn stimulate the economy. So I think your point still stands. Okay, this is how this kind of used to work in the stock brokerage business at Goldman and other places circa 1990 in terms of how do these brokerage firms work. Well, I'm saying these fees are fixed and they're super high, et cetera. And then you look at the ROIs of the brokerage firms, you go, hey, where are the excess profits, smart Alec? That's true.
Yeah, where are the profits?
Yeah, where are the excess profits? I don't see it. I don't see this super high ROI. Well, so it's a very competitive business on the brokerage side in this sense. They all compete with each other in a free market to pay up to the point of indifference for the agent. Right? They'll say, I'll give you 80%, 90%, sometimes 100% of whatever you bring in. Why 100%? Because they want that standard bearer in Malibu or something. So they get most of the volume. People think they should use this firm in Malibu. All right. So the excess profits, as you may not surprise people once I say this, reside at the agent level, not at the brokerage firm level. Because they're all saying, look, if you want me to join Compass or Coldwell Banker or Remax, whatever, what are you going to pay me? Right. And so they all bid up to their fair market point of indifference. And so you don't see excess profits. In fact, because the industry churns so fast, sometimes you see less than excess profits in the brokerage business. But this is why many of them at the top 10, 20, 30% driving really fancy cars and driving really big houses. And there's TV shows about them because the excess profits are being driven when that 6% fee, or let's say 90% is going to the really good agent in Malibu or Rye or something, and 10% is going to the brokerage firm. So that's how the industry works. It's kind of like Avon, or they're all competing for that door-to-door salesperson, and whoever's the best at it, they'll pay more of the payout, whatever is earned for that door-to-door salesperson.
Yes, the excess profits all go to the agents, not the brokerage services. Yes. Where the agents hang their hat because they have to compete for that agents. Jack, I just want to go back to 2021 when you're going to list Rex Homes. I believe you said you were targeting a date in July, and to the best of your recollection, it was in February when Zillow made that change. They joined the National Association of Realtors, and then they put your listed homes in the other section and not in agents, which one might say that kind of implies that you're not agents, even though you are agents. I'm not going to ask what was the effect of that Zillow move on your business, because that would put you in a position of making a claim about A causes B. I'm not asking you about A causes B. We know A happened, but just what happened to B. So I'm not asking you about Zillow at all. But after Zillow did this, what happened to your business? What happened to your listings? What happened to your transaction volume? So I'm asking you about that February to March, April to July period of Rex Homes.
Yeah. I just want to make sure that your listeners know I'm talking at a very big picture level, Jack, but then when I come back in more detail, I'm glad to come back on your show. But I think, effectively, I kind of said, well, they joined in February. I think they actually joined 3 months prior to that or 5 months prior to that, but they did make the change to their display page until January or February, at least in the cities that we are in. So I'm just in purposes of getting clarity with your listeners, I'm conflating some events just so it's easy to
Mm-hmm.
explain. If I start going into detail, I think everyone's going to get lost.
Right.
Yes, and so what happened to us, of course, is two things. One is sellers think that who are selling their home think that we're not agents because they go to Zillow to look it up. We say they're agents. They go, no, Zillow doesn't say it. It says you're not an agent. So when you're making your case of first impression, it's pretty hard to say, yeah, well, Zillow's just got it all wrong. And like, really, Zillow's it all wrong? Yes, they do. Number two is they'll say, well, if I list with you, then my home's getting pushed into this other tab, which looks like it's like all the refuse of the brokerage industry. And furthermore, I don't want to be viewed as refuse. And how many less views do I get if I'm on the back page of Zillow or this other page, not in the page where 95% of the listings are or 98% of the listings are? Well, honestly, probably 80% less based on the data we got from Zillow and other in our own data, maybe 90%. Yeah, I don't think I appreciate the lower fee, but I really do want to sell this home. Now, we did a lot of things with AI, I have to say, that would try to predict who a buyer would be, just like the way Citadel or Goldman tries to say who's the most likely buyer for these shares. But it's necessary to do that to really sell a home well, but it's not sufficient. You need to be on the deep platforms, right, for credibility reasons as well as eyeballs. You can't always predict who's going to. Sometimes you can predict pretty well. Sometimes it's seldom. Depends on the market, but you really have to be on those platforms. So of course it hurt our business. We didn't realize, we knew it'd be bad until they deployed it. Actually, they were telling us, at least by email, that hey, you shouldn't see any diminution in your views. We're like, I don't know. It doesn't feel like that's going to happen based on our understanding of tech and marketing, and we're a tech marketing firm. When we saw the deployment, we're like, holy Toledo, this could be bad. And then, of course, every day we look at the data. We are a data center company. And as they rolled out across the cities, we would see it dropping. And we tried a lot of things to fix it. Well, maybe we can fix this. And we tried everything we could to fix it. But I think the conclusion is what we just described. We thought we might have ways to fix it for a while, but in the end, the numbers, we look at numbers every day. I mean, we're digital. We were a data center company.
Would you say the drop in transactions was material?
Oh my gosh. Yeah, we grew 100% every single year, kind of like an Uber or a Robinhood. And then even in the COVID year, we grew at 60%. We opened only one city. So it wasn't like we were just opening new cities. We opened one city in 2020 during the COVID year, and we grew at 60%. So it gives you a sense for same store sales, so to speak. So even a pandemic could not slow us. And then Zillow joined NAR, and it's like, okay, that could do it.
But pandemic not only didn't slow you, it accelerated everyone in the home transaction business, right? Because as interest rates fell, there was a frenzy for housing, and I mean, mortgage transactions was very high in 2020.
Well, two things happened. One is that for the second quarter, they dropped off dramatically. It was like, holy Toledo, no one can be in places, people's place of residence or close to others. There was an exception for home brokers as an essential business. But a lot of people just said, not a good time to list my home, not a good time to go visit people in their homes. So second quarter was really bad. The rates are coming down. Third and fourth quarter are pretty good, but net, I think for the year, maybe the industry was up 2 or 3%. I think the first and second quarter were down. Third and fourth were up a lot. But you put it all together, I think, and Jack, you'll know better than I think the industry was up maybe 2 or 3% that year, but we were up 60%. It was not just 2, 3, 4, 5 standard deviations away. It was 500 standard deviations away from the industry growth rate.
That's a good point. So tell us about your lawsuit. What specifically is your complaint, your suit? And I think people listening to this will say, okay, we understand why Jack Ryan thinks that what the defendant, Trulia, Zillow, and NAR did was wrong. But just because something is wrong, there are plenty of things that are legal but morally wrong that I wouldn't do. And likewise, there are things that really nothing is wrong with them morally in some people's opinion, but they are illegal. So wrong and illegal are two different things. So what is the legal case against the defendants?
Well, it's a very standard antitrust claim, which is the NAR and Zillow worked together as NAR has done for years, to prop up fees in this industry and combine forces to hurt competitors who weren't abiding by the existing fee structure. I think it's hard to understand how it could not be that. There's NAR has an offer out there all the time saying join the NAR, and if you join the NAR, you have to enforce these rules. That's an offer, and then someone says, "Okay, I'll join." That's an acceptance. I think it's pretty clear that if there's an offer and an acceptance, you have a deal, and it's just, Jack, sounds horrible, but it's just the same thing. It's like if I gang up with 3 other people and say, "Hey, let's go get Jack Farley," and then we do it. You don't need to have written documentation. We all agree to it. We all know what happened. So I think that's pretty easy. But I think what might be more interesting to your listeners is, there's 4 ways that this could impact their long short positions or their macro positions. Okay, so there's 4 different ways these super high fees go away, with the result that we've talked about: who's going to benefit, who's going to get hurt by this. One is there's a lawsuit on behalf of sellers, Jack, that was settled for $450 million or so, right? And by the way, that was in Missouri, the Sitzer case, and they won at jury for $1.7 billion before tripling, which would be $5 billion, and somehow they decided to settle us for $450 million. Put that aside for a second as to how that happened, why that happened. Seems like a bad trade to me, but that's on behalf of sellers, right? And then they had a nationwide settlement. Then there's lawsuits on behalf of buyers, which are still extant. Then there's the U.S. Department of Justice. You might have seen 2 months ago that they got approval from the Court of Appeals in Washington, D.C. to launch their own investigation. And they're on behalf of all the people. The U.S. Department of Justice is the U.S. v. someone, right? It's people of America versus someone. Say you broke a law. And they have standing for everything. We only have Rex only has standing on our issues. So there's the Department of Justice. And the 4th avenue, legal avenue, is Rex. And we're on behalf of competitors. So there's the sellers and the buyers who got hurt by this price fix. And then there's these rules also hurt or put out of business a competitor. And that's Rex. And we have our lawsuit in northwest area of the U.S. So anyway, those are the 4 avenues by which all these horrible I just outlined could get fixed.
So there's case against the sellers, which was settled for $418 million. Case for the buyers as the plaintiffs is still extant. The U.S. department that is going on, and being sued by the U.S. that's the tough business. And then you are the 4th avenue, Rex versus Zillow,
Yes.
Trulia, and NAR. What is the current state of your lawsuit, Jack?
So we are on appeal in the circuit court, which makes up Washington, Oregon, and Northern California. We didn't get to trial in the district court. We got kicked out on summary judgment because the judge said there wasn't an agreement here. But as we all know, that agreements don't have to be in writing; they have to be explicit. As we said, it could be an offer and acceptance. So we're appealing that, and we should be filing sometime soon. And then that's where things stand. US DOJ, they're very professional. No one's going to know about them until they actually file something, if they do. And then the third is, their buyer suits are out there. So for purposes of your listeners, if you wanted to think about, okay, not only do I want to go long, short, but when do I want to do these things, right? That's being right about timing is as important as being right about the direction. I found out the hard way many, many years ago.
Yes.
There's these 4 avenues that they should keep track of. The sellers seem to be done unless the DOJ intervenes and says that settlement is farcical. You should not approve this to the local federal judge. There's the buy side suit that is still active. There's our suit, and then the DOJ on its own 2 feet. And I think the resolution for buyers and us, I think in the next year, people should know whether we've been successful or the buyers have been successful or whether this settlement with the seller stands up. And then I don't know, I really can't opine about when the DOJ may or may not act.
Got it. So I'm on nar.com, and from late August of last year, they have a pretty self-congratulatory note saying National Association of Realtors triumphs in Rex antitrust lawsuit. So you're appealing that federal court dismissal.
Yes. I'm just summarizing things really at a very high level for your listeners. Those things are public. They can pull the documents, they can pull the filings, and they can
Mhm.
hopefully they'll be able to see soon, with the issues upon which we're appealing in more detail
Got
and
it.
make their own judgments about whether we're successful or not.
And so NAR said Rex claimed that NAR influenced how Zillow displayed listings, which is false. So you think that NAR changed how Zillow displayed listings, and NAR says they
NAR
didn't.
has rules about how you're allowed to show listings. I mean, is right there on the rules, the NAR rules for you must segregate listings. So we never got in front of a jury. The jury was out for 2 hours in the Sitzer case. Usually juries are out for days or something, considering a civil case or a criminal case. In the Sitzer case, they were out for 2 hours and returned the $1.7 billion verdict against the NAR.
What do you think is likely? How do you think in 5 years the real estate brokerage industry is going to look like?
I would be shocked if this industry still behaves in the 1990s kind of way, looking 5 years out. Why wouldn't it behave in the same way taxi dispatchers, stockbrokers? Think of every other intermediary, the brokerage intermediary, and what the internet has done to affect the business. Like the internet's become the intermediary with the full transparency and flow of information, driving the transaction costs way down. It'd be hard. Is it possible that this group would still be able to enforce these fees that no other intermediary charges in the US that I can think of? Maybe there's some group, I can't think of one that's large that would, it's unfathomable to me. But maybe, this could be, me, because I was looking at this industry, 9 years ago and saying, why isn't this operating like every other intermediary? Right. So I have to say that thing called observation bias, Jack, may exist. But even when I take myself out of myself and look at it, could it really be that in 2030, they're still charging 5.5% to trade homes? I just can't get my head around that. And think about the damage to so many people. I mean, not just the homeowners and sellers. By the way, these we talk about this win-win-win. We talk about, hey, GDP growth goes up, probably permanently. I don't know if it's 0.1% or probably 2%. You free up this part of the economy because it's so big. CPI goes down, right? And then there's all these derivative, benefits to all these people, whether they're carpenters or plumbers or architects or lawyers who help you buy and sell homes, things like that. But also, many states have a transfer tax when you sell a home, like 0.01% or something, that funds fire department, first responders, teachers. And so when you have these transactions choked by this 5% fee, who else is getting hurt? Every state and local government has a transfer tax that's funding these big deficits they run right now at those state and local levels. Well, this ameliorates that quite a bit because all of a sudden these transfer taxes go way up, 2 or 3 times up. So I just can't imagine that, given it's a win, 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 win everywhere. And we're not saying anything should happen differently than has happened in the stock brokerage business or travel agencies or, used furniture on eBay or whatever. I just can't imagine that it stays the way it is. It's not good for the American public, American consumer, American economy. It's not good for anybody, but for realtors. I can't imagine it would stay this way.
And is the Federal Trade Commission, the FTC, which looks at anti-competitive cases, have they looked into the realtor business?
Well, this is an issue of debate in Washington, D.C. Is there's these two different agencies. There's been a long debate. FTC has some jurisdiction over some of the issues. The DOJ has some jurisdiction. This is why some people in Congress are saying that we should just merge these two agencies together, so they're not fighting against each other. Interestingly, it was the FTC that allowed Zillow and Trulia to merge in 2014 or something like that. I just at the time was like, what? It's shocking. But the second thing is the DOJ has control, antitrust division has jurisdiction over these issues. And they usually, I think, this is just big picture. This is really without knowing. I think oftentimes when the industry falls into a gap between the two of them, they meet and figure out who's going to cover what, and they debate who should be taking this or that issue. So anyway, to answer your question, the FTC, for instance, did have the Zillow, Trulia combination under their ambit. And then DOJ got this topic, which is the broker industry itself, not just the aggregators, under their aegis. So the DOJ has this one right now, or they do have this one, period, unless something bizarre happens.
And what's the sentiment in Washington? I imagine, I mean, if you were to get in front of every senator and congressperson, you were making a passion case. I mean, are a lot of them aligned with the National Association of Realtors? How many of them kind of see it your way, or is the answer not many?
I think they all see it our way. I have to say, this is the curious case, the dog that didn't bark, in case you're a Sherlock Holmes fan. So one of the things, the way they create the cartel is one of the rule is that if one person joins the NAR in your firm, everybody must join the NAR. You can't. So everybody. What does that mean? Is the forced roundup of dues. So if there's 1.5 million NAR members and local associated realtor members, and they all pay collectively about $1,000 a year in dues. Big picture again. This is a big picture. That's $1.5 billion, if I did the math right. And guess who's the largest trade group lobbyists in Washington, D.C.? You only get one guess, Jack.
NAR.
Yeah. Okay. All right. By the way, in terms of the filings themselves, you have to add up both teachers' unions to get to the number that the NAR spends on federal lobbying, to give you a sense for the size of this group. All right.
Wow.
Okay, so why is it? I'm just gonna give you a thought experiment here. There's antitrust subcommittees in the House and in the Senate. They are holding hearings on Google and Amazon, pick your company, right? The Facebook, for anti-competitive behaviors. I have a thought experiment for you. Are there any scheduled hearings on this issue with the National Association of Realtors?
I don't know, but I'm going to assume no.
No, none. There's been headlines about this as a cartel now for 8 months and no hearings. Really?
Yeah.
You are at a loss for words. Really? Have you not seen these headlines the last 6 or 7 months? Have you not seen the numbers about how much money is going from the middle class Americans to brokers? Have you not seen that knock-on effects to the U.S. economy? Have you not seen what it could be doing in inflation? Have you not seen what it could be doing to GNP growth? Have you not seen what it's going to do to local and state revenues? No hearings.
Wow. Yeah, I've heard it said that the real estate industry is a huge contributor to DC, but I never pinpointed it that it's not so much landlords, it is the brokerage industry that is the biggest contributor, and that's maybe why we have the system that we do.
I don't want to speak about any individual, but when someone say, "Hey, we're with you on this fight," but we can't. It was 1.5 million of them. How many is that per congressional district? By the way, the top 20% make a lot of money. Their job is to work the PTA and to work the football games and the churches and the synagogues and slapbacks and all that. It's the last door-to-door salesperson in the U.S. There's $70 million in federal lobbying at the federal level. That's just the federal level. And the ones that are in those forms they fill out. You really want me to take these guys on? Is that what you're asking? Can we just have a hearing? We'll think about it.
Yeah, it seems like the $1,000 per year to your dues to the National Association of Realtors seems like a pretty good investment. The realtors are getting their money's worth and more. Sounds like it.
But Jack, what I ask about that is, and once again, for everyone listening, I'm talking very big picture. Like, here's a good example: $1,000 per year. But they put out, well, how much goes to the NAR? How much goes to local association of realtors? How much goes to the advertising campaign, like your local broker, the ones you see that say NAR, your friend or whatever it says. I can't remember the ads what they say, but we'd have to line item But it is $1.5 billion in money going to the National Association of Realtors, the local Association of Realtors, the forums they put on about the industry where they have all the competitors show up and discuss the industry, all those things. So when I say 1.5 billion, I just don't want people to think that I'm saying 1.5 billion goes to NAR. I'm sure I'll get an angry email from NAR in a minute now. I'm not saying that. I'm saying it's 1.5 billion goes to dues. And then you can see by each MLS, each local association of realtors, how they break out those dues. Now, could they cut out the advertising expense? Could they cut out some of the stuff that they have that where the $1.5 billion is going to? Of course they can. They run their own P&Ls. They can divert it any way they want. And so that's why I say, I think from what I can tell from the public filings, about 70 million or more goes to the federal lobbying, but there's still 1.4 billion out there, and they can divert it to what they want to do, what they think is the best interest of the industry.
Got it. Jack, is there anything, anyone listening to this who has found sympathy with your arguments that they can do to get involved to maybe change it? Right there, Congressman?
Well, of course. And, the DOJ and other people, and just, I think it's just good for everyone to know what's going on and how beneficial it would be if this were to go away. First, not only the 120, 50 million Americans that own homes, but all the renters in the U.S. too. It's a huge benefit. And it's just for all the trade organizations, all the professionals who depend upon transactions, all the home builders. The knock-on effects are just absolutely huge. So what can they do? I think just be aware of it. Make sure that, if they have any interest with their local state attorneys generals and also the local National Association or the local DOJ people, look into this, see what's going on, write their op-eds. I mean, I think it's pretty clear what's happening here. I think we have great data, and everyone's anecdotal experience, I think, lines up with what I'm sharing with them. No one's going to say, that's not my experience, I don't think. So I guess that's what we could ask, people to do.
Got it. The book is Bringing Adam Smith into the American Home. And it's been a pleasure speaking with you, Jack. My final question is not talking about brokerage at all. We've talked about that at length, but just the health of the housing market. In other words, demand being strong and demand being greater than supply and prices going up. I think many in the media and many economists and many in the housing industry, myself included, in 2022 thought that rising interest rates would really put pressure on the housing market. Now, as we mentioned earlier, it put a lot of pressure on transactions. Transactions dropped like a rock. However, housing prices did not because there were very few sellers in the existing home market. So a lot of the buyers had to go to the new home market. So prices have moderated and they appear to be increasing now. How would you currently assess the health of the housing market? And earlier we talked about long short traders. In your personal opinion, obviously not investment advice, like what do you think about the pricing power of home builders? In other words, is it going to be a strong market for housing or not?
Cal, it's so hard to predict. It's kind of like predicting the future of the stock market in many ways. In fact, in this book, we talk about how interest rates seem to have been uncorrelated over the last 40 years with how many homes get traded in housing prices. If you go back into the late 1970s, during the Nixon Carter administration, when rates were really high, it seemed like it didn't really affect home prices, and the reverse. Sometimes rates were really low, and it seemed to really affect home prices. So it doesn't seem to be as correlated as one would think. In the short term, of course, people locked in their low-term rates. They don't want to sell because they locked in these long mortgage rates that crimps the supply, and demand is as high as ever. By the way, it's not just the brokerage fees. I don't want to give people that impression too. It's a lot of these zoning rules that don't allow you to build multi-tenant buildings, or don't allow you to build homes quickly as you would like. I think brokerage has a very big impact on it. It's going to make things a lot better when these huge fees go away. But there's also other issues having to do with NIMBY and things like that, that especially in California, constrain the supply of housing. The issue about interest rates and housing prices is one that's been debated by people much very talented like you, Jack, for a long time. You do a chapter on it and show what happens to interest rates and housing prices and volumes over time. And it's hard to find a great correlation between the two.
That's really interesting. Well, Jack, we'll leave it there. Thanks so much for coming on, sharing your views, and thanks everyone for watching.
Thanks a lot for having me, Jack.
Thanks for watching. Remember to check out vaneck.com/moatfg to learn more about the VanEck Morningstar Wide Moat ETF, ticker MOAT. Lastly, Forward Guidance is available not just on YouTube, but on all podcast apps, and a video version is available on Spotify and Twitter, where I post interviews regularly. Thanks again. Until next time.